Hi everyone, welcome to Stay Focused, Focus Real Estate's weekly video blog, and I'm Erik Gould.
I'm Randal Engelman.
And this week we are doing our monthly Focus 5.
Leave it to us to break down the tax code into just 5 things that are most important for you to know.
It's simplified.
Totally. I think it's kind of elusive for some people and just kind of get an idea of what's going on with the tax code. So first thing we want to point out is that there's a couple things that have been preserved. We have 1031 exchange, which is preserved.
What's a 1031
1031 exchange is when you sell one investment property and you turn that money into a second investment property, you can use an intermediary to avoid your capital gains. Also, the capital gains exemption for your personal property. So you own a single family house. As a single person, you have a $250,000 exemption. As a married couple, you have a $500,000 exemption on capital gains on a home that you have owner occupied for 2 of the last 5 years. Great news for homeowners.
So a couple things did change a bit.
Yes.
Relative to homeowners.
The mortgage interest deduction reduced from $1 million worth of loan value to $750,000 worth of loan value. It used to be that you could write off interest up to $1 million worth of the loan's value, not the house's value, but the loan's value. And now that is dropped to $750,000 in loan value. So that's one change that's coming down 25%. The next one is that you can no longer deduct your home equity line of credit interest. So if you pull out a home equity line of credit to do house repairs or whatever you're going to do with that,
interest is no longer tax deductible.
That's no longer tax deductible.
The other thing that changed is the state and local tax deduction, which they call SALT. Love that name. SALT is, they've put a deduction now that you can only claim up to $10,000 of your state and local taxes that you pay on your income taxes.
Yep. It all actually boils down into the fifth one. The fifth one, the one that another change in the positive, is that they've increased the personal deduction from $6,000 to $12,000.
So anyway, those individuals who would have normally itemized from $7,000 to $10,000, $12,000 no longer need to, because you get that personal deduction up to $12,000.
Yeah, so we're going to attach a little link below for some more information if you want to get some more. Of course, don't rely on your real estate agent for tax information. Talk to your accountant if you have questions about that.
That's our Focus 5. Thank you for watching.
If you have any questions, remark below or give us a shout.
Yeah, we'd like to hear from you what you think of the tax code.
And until next time, don't forget to like us on Facebook
And subscribe to our YouTube channel.
Stay tuned
and stay focused.